Hello and welcome everyone to the week ahead commodity report for the 11th to the 15th of June 2018. Next week we have a big week. We have the Federal Reserve FOMC statement and we also have the ECB announcement on Thursday as well. So we'll go through a bit of preparation for that with you on today's session. We'll be having a look at the commodities, the metals and also energies as well. So what do you need to know as we go into next week? Well, essentially the FOMC statement is on Wednesday. It will be taking place at 7 o'clock London time. We are in fact doing a complete preparation webinar for all of our traders at the Gold and Silver Club for that. If you'd like to find out more about that, there is a link just below in the description to join us for that particular live trading room session. There is a very specific way the metals tend to behave prior to an FOMC statement and the breakouts that we can see after that as well, but also being nimble as we go into an ECB announcement as well, which is exactly what we have on Thursday with Mario Draghi then speaking in the afternoon as well. And where we're poised at the moment on the metals, we're seeing some interesting price developments as we go into next week. So I'll point out first of all to you the precious metals and what we're looking at going into next week. Platinum we have discussed on several occasions where we've been looking at accumulating positions at or just below $900 per ounce. We broke out again on Friday after an initial test of the weekly lows. It's closed with another buy signal here at $907. What I find interesting about platinum is higher time frames where it seems to be on the verge of a breakout here just above this recent downward trending channel. We're starting to break above that overhead level of resistance. You can see that into the close on Friday. We've got a weekly rejection candle, a positive close here again. We've seen 3 weeks now of positive closes after a retest back below $900. We've got a fresh buy signal here on Friday, and we seem to be also on the brink of breaking out from this trend channel too. So Friday retested the lows here, and we remain long platinum at the moment as we go into next week. I'll be watching the price action very carefully as we get closer to the FOMC statement, but also after the FOMC statement as well. So I would definitely have platinum on your radar. It is currently trading at $907.60 per ounce. Silver, I've had a lot of questions about silver over the last week because we have now finally broken out of this consolidation where silver has closed up 2.3% over the week, and we can see here where we're sitting right at the upper end of the range. In fact, silver broke out to 1 month highs. I discussed this midweek last week, so feel free to go back and watch that. We were looking at potential for a breakout midweek, and we did see that breakout. We've continued to see follow through into the close on Friday. It's the strongest close that we've seen here since approximately mid-April. We've got the potential as we go into next week's FOMC statement or after that to see a breakout back above the swing highs here, which reside just below $17. If we can break above that level, we've got the potential then to reclaim back above $17, and there could be quite a lot of upside for a breakout here with silver. Bear in mind though, we are also coming into some overhead resistance where a number of times silver has been unable to break above this level, and we could also see some profit taking and squaring up of positions just prior to some major news items on Wednesday and Thursday next week as well. So we've already got long positions that we've been establishing at the lower end of this range. We've been managing those, taking some profits off the table, leaving some of our exposure on the long side as well, and we'll be monitoring the price action going into the early part of next week. But silver can have explosive moves on the FOMC statement too. Moving over to copper, we hit our profit target on copper this week where we've seen a breakout up to 3.5 month highs. Copper is just about holding onto resistance at the moment, coming back to the swing highs from the end of December. You can see where we've retested that level just on Thursday. We'll watch out to see if we get any additional follow through. We're seeing a bit of a short squeeze at the moment on copper, up 7% now so far this month. So we want to see whether we will just encounter some resistance and potential profit taking again around this level, or whether copper is able to break above the 2018 highs here as well. So copper I would also have on the radar. Copper has actually been leading in terms of the metals over the last week. Palladium also had a sizable move back out to $1,000 per ounce. Then, of course, we want to move over to gold. This is one of the tightest trading ranges that we've seen on gold here in over 10 years. So we've been really range bound here of late. We've been coiling in price, holding support above $1,290. There's been several attempts by gold to break above $1,300 over the last week. Gold has been unable to do that so far. Now, we have continued to see this consolidation into a pennant formation. So let's just go over to the commitment of traders data on gold here as well. Hedge funds and money managers have cut their net long position in COMEX gold contracts over the last week, and we still are seeing the consolidation, although on Friday, of course, we did see gold firm up again. It hasn't broken support below $1,290, but at the same time, we've not broken above 1,300 US dollars per ounce either. So we want to see which way this will go next week. And of course, the FOMC statement on Wednesday will be a major catalyst for the next big move here. There's going to be trading opportunities in either direction here, depending on which way gold does break out. Now, moving over to crude oil, what do you need to know as we go into next week? First of all, we had the oil rig count, which came out on Friday, and essentially the oil rig count has continued to increase again. We've seen a third consecutive increase in the amount of oil rigs. It's actually the highest level now since March of 2015, which is bearish essentially for oil prices. We saw another pullback into the close on Friday too. Also, speculators have cut their net long position in oil over the last week. So hedge funds and money managers have cut the bullish bets on US crude oil futures in the latest week, as we've seen prices fall again 2% over the last week. Overall, it's been another negative week here for crude oil. However, we do have a lot coming up in terms of energy reports as we go into next week. And one of the most important dates for your trading diary is going to be Friday, the 22nd of June, which of course is the OPEC meeting. And typically this can be a big catalyst for price action on oil. Again, if we have a look at WTI crude oil, what I would look at here, if you zoom out on the chart, just from a technical point of view, you can see where we broke through support over the last week. We broke through a 12-month channel here, which has been very supportive to the price. However, over the last week, we also did find support right at the monthly pivot. We bounced off that level on several occasions. If you look at the weekly chart, we have formed a rejection candle as well on the weekly, finding support just around 65 US dollars per barrel, just below that. In fact, we bounced right off $64 and about 20 cents per barrel here over the last week for oil. So we are looking at a resolution as we go into next week, whether this is going to be able to bounce higher and follow through and start to make a move back towards 67 US dollars per barrel here, or whether this is just going to encounter resistance again and we're just going to see the price roll over and potentially break back below the weekly lows here of $64. And if we break below that level, there is quite a lot of clean air, and really the next major level below that would be going back to the swing lows from mid-April, and then of course we'll be targeting about $60 per barrel on WTI crude oil if it cannot gain any momentum to the upside beyond this level. Then we move over to Brent crude oil as well here. Brent crude oil, again, looked like we might be on the verge of a breakout on Friday until we had the oil rig count data later on in the session. And we're also stumbling across some major overhead resistance here too, where we might just see Brent crude oil roll over next week, break back below Friday's lows, and then move back towards the lower end of the channel. Brent crude oil would really need to break above the weekly highs here, so Friday's highs and also the neckline here, in order to get a move back towards the overhead resistance, which resides, of course, at the moment around $80 per barrel, if we were to see a breakout and a follow-through move next week. Otherwise, the price structure is vulnerable to roll over. If we don't see Brent crude oil catch a bid next week, it could easily roll over and come back towards the weekly lows here and revisit approximately about 73 US dollars per barrel if we saw another corrective move lower and we came back towards the lower end of this trend channel as well. Now, bear in mind again, if you're trading oil, oil is a very fundamental and politically driven market. Great example of that was at the beginning of last week, where we saw the 12-month trend channel break down with oil after the US government had unofficially asked Saudi Arabia and some other OPEC producers to raise output. Again, we have an OPEC meeting coming up later on this month as well. And of course, if you'd like to join us for our live trading rooms during the week, get access to our training services and of course all of the trades that we will be taking at the Gold and Silver Club, all you need to do for more information is go to www.jointhelivetradingroom.com. The link is also below this video in the description, and of course make sure you subscribe to our YouTube channel as well to keep updated with the latest commodity reports.